With the lifting of China's border restrictions, we've seen oil prices rise today. Chinese markets closed higher, and investors are really in a celebratory mood. And I'm joined by the co-founder at Pimlico Partners, Phillip Lord. Thanks for joining us today, Phillip. Now, China's borders open. The crackdown on the tech sector is easing. We saw markets rise today. What are your projections for Chinese stock markets?
Yeah, I think in the short term, it's going to be very bullish. With obviously new activity in both domestic and international. It's super excited about the Middle East. I think there's going to be a huge amount of influx of Chinese tourists and a lot of preparing coming over here pre this as well. But there's going to be a big influx of Chinese property buyers coming into Dubai and Abu Dhabi. On the stock markets? I think this is going to be like a 2-month bull run, especially around the Chinese New Year. And then I think we've still got the harsh reality on stock markets of the new interest rate hikes of last year. So I think short term, good strong markets. But over the course of the year, we're going to see a 20% correction in US stock markets, which will definitely impact the Chinese markets.
And what type of influx of Chinese property buyers are you expecting to see in the UAE?
Yeah, I think it's going to be at the top end initially, so people coming in to buy the villas, the luxury penthouse market. But I think there's going to be people that take an investor, perspective of buying 20, 2-3 bedroom units. So I think there's going to be a lot of people wanting to have cash offshore, and there's going to be a lot of new money coming to this property market. So I'd expect Dubai properties to rally, over the next 0 to 8 weeks.
Now, Goldman Sachs says Chinese stocks will rise by 15% in the coming months. Do you think they're right?
Yeah, I totally agree with that. I mean, there's going to be a lot of new activity. They've been locked away for 3 years. There's probably going to be some overseas buying of companies and assets. There's going to be more, business trips from all the industries to market, and there'll be a lot of new activity and a lot of news flow come out of these Chinese stocks. Also, they've been not exactly great performers. So, asset prices are relatively undervalued to the US stock market. So I think it will outperform in that sense. I do think, my bigger concern is on a macro picture with the US markets, and then that impact in Chinese, but maybe the Chinese impact will be later on in this year.
And what companies and sectors do you expect to benefit the most? We saw Alibaba rise almost 9% today.
Yeah, I think Chinese property stocks are one to avoid, but all the big tech companies like Tencent, Alibaba, Baidu, they're going to be the outperformers. Yeah, I think anything travel related as well. Whether it's hotel stocks, Ctrip, or the airline industries.
And will oil rally again as China reopens and the global economy recovers? And where could we see oil prices head in the near term?
It's horrible to think about it, but yeah, I mean, I think we're probably going to look at oil rally back up to 85 as these 1.5 billion people start to travel overseas again, and that's going to create more demand for oil. But in turn, that's going to also be a negative for the European and US economies. So I see short term probably it's going to be capped out about $85-90 a barrel.
Now, you mentioned more Chinese tourists coming to the UAE, and outbound tours from China has also fueled expectations that consumption abroad will raise inflation in the US and Europe. Will Chinese tourism have much of an impact, in your opinion?
Yeah, I mean, when we visited Europe for the past 3 years, there's been nobody around, from China. So we're going to see a lot more demand hit those tourist cities, and in turn into the underlying economy. So I think it's, short term, super exciting, but, that comes at a cost in the oil price and energy prices. So.
Thanks for your analysis today. Co-founder at Pimlico Partners, Phillip Lord.